Would you comment on the current level of the 10-year yield and some other long rates out there, whether or not you think they would have a negative effect on the economy? And if not, is there a level that would give you concern? And finally, the third part, other central bankers have expressed concern about what's happened to yields in their countries, and even some taken action, but not you. Could you give us your general idea or orientation towards the idea of coming into the market and affecting a particular tenor of the bond market? Do you like that idea? Do you not like it? Is it at the top of your toolbox, or is it something that you think is at the bottom of the toolbox?
Sure. So we monitor a broad range of financial conditions, and we're always attentive to market developments, of course. We're still a long way from our goals, and it's important that financial conditions do remain accommodative to support the achievement of those goals. And if you look at various indexes of financial conditions, what you'll see is that they generally do show financial conditions overall to be highly accommodative, and that is appropriate. So that's how we look at it. I would add, as I've said, I would be concerned by disorderly conditions in markets or by a persistent tightening of financial conditions that threaten the achievement of our goals. We think the stance of monetary policy remains appropriate. Our guidance on the federal funds rate and on asset purchases is providing strong support for the economy, and we're committed to maintaining that patiently accommodative stance until the job is well and truly done.
Could you give us an idea of how you sort of feel about that tool of being able to come into a particular part of the market and either doing an operation twist or something like that? Is that something you feel to be the top of your toolbox, or something that you don't really prefer?
You know, the tools we have are the tools we have. What I'm telling you is that the stance of monetary policy we have today, we believe is appropriate. We think that our asset purchases in their current form, which is to say, you know, across the curve, 80 billion in treasuries, 40 billion in mortgage-backed securities on net, we think that that's the right place for our asset purchases. Now, we can change them, of course, in a number of different dimensions, should we deem that that's appropriate. But for now, we think that our policy stance on that is appropriate.
Thank you. Rachel Siegel.
Hi, Chair Powell. Thanks very much for taking my question. You've spoken about the pandemic's disproportionate toll on Black Americans, Hispanic Americans, Asian Americans, and other groups in the labor market. And I'm curious if you can speak to specific indicators that the Fed will be using to measure job gains for groups that have persistently higher rates of unemployment compared to white Americans. And relatedly, since you've described vaccines as key to the economic recovery, is the Fed concerned about lower vaccination rates in communities of color, and what barriers do you think exist there? Thanks very much.
So which measures? So we do monitor and communicate very regularly about different labor market disparities in the labor market, let's say. So the African American unemployment rate is substantially elevated, and so is the Hispanic unemployment rate. So we look at those and we see those as, you know, it's slack in the labor market. It's sad to see, because those disparities had really come down to record lows since we started keeping the data that way. As recently as a year ago, February of last year, we had those disparities quite low. What happens in a downturn, though, is they move up at twice the speed of white unemployment. We monitor those.
I put in a couple trades right now. I put in some 39.80 puts right now, thinking that we do an end-of-day pullback here, maybe down to the 39.70 level, and we run up tomorrow. So I'm playing this right now. My fidelity is still crapping out on me, but getting a little bit better. I only bought 5 contracts on this dip, and then looking to reload at the end of the day for aftermarket and open. People are going to start taking their money that they set aside for taxes and re-entering the market right now, I think. But I think a rug pull here is likely at the end of the day. Double topped here at 39.80 almost, and we've had this massive run up. 50% retracement would take us to about 3956, but on this last rise maybe to 3968. So inputs right now, if we break above 3980 here and are prepping for another leg up, then I'm going to get out and immediately buy calls. Let me queue those up though. I'm buying March 19th on the calls. And I'm going heavy on the March 19th 3080s potentially. 3980s. Okay. Let's go ahead and do that. See if we pull back here. 3980 is a crazy number considering how close we are to 4K. We could still hit up to 3989 here. Boeing 260 calls are doing great. I'm gonna hold those. HD not so good, but coming back. Tesla 3930s we sold. Right now we're just in the Tesla 750s, which we're going to keep in case they decide to run up tomorrow. 696 now on Tesla and heading up. So all in all, a really good day turned out to be. All right, we're dropping here. As expected. Let's see how far we move back. If we punch past 3988, we're going to go to 3989. We're going to hit a lot of resistance here at 3980, I feel like. All right. Buying some 3980s for Friday. And let's get out of this trade here. Can't see anything. Yeah. I think it starts in 30 minutes. Oh, I think so. All right, we bought those at 20.50. These 39.80s are not working out for me right now. And we're going to hold on to those. So we're going to be straddled towards the upside here. Got my cells queued up here for a 39.89 pump. Go ask, go downstairs, get another snack. Close my door, please. All right, let's get up to that next fib level. Based out here for a little bit. It's power hour now. Calls are going up, puts are going down. Tesla's now at 702. Tesla coming up, making up for its shitty day. Yep, nice push off JPOW. Thinking we get to 39.89 today, potentially, maybe even higher. I'm still holding on to 39.80 puts just for a chance of a rug pull here. BA calls are up 14%. Nice. Let's see if we can get an end of day push. 4,000 today would be unbelievable. What did I say? 20.5. We're now at 22 on these 39.80s. We're down on the 39.80 puts, obviously, but acceptable. You know what? 39.80. So calls are expiring 319, which is Friday. A lot of room to run there. Not too worried. I'm going to be focusing on um, selling out of these puts and potentially buying more calls at 39.80. All right. So in and out sounds so good today. I might have to follow you on that one. All right. We are getting positive on these 39.80 soon. This is just for the end of day rug pull scenario potentially. Our 39.80 calls aren't moving too much down a little bit now from 20. Gonna try to sell out of the puts on the downside here. See where it ends up. Again, there could be a retracement down to 39.68 right here before heading back up. We're on, from an Elliott wave perspective, we're on leg 4 and then potentially higher is 5, and my 5 takes me to potentially 39.89. All right, so puts are starting to get positive. Let's see if we jump off this 39.68. Now, a further retracement would take us down to 39.62, so maybe down here. Potentially down to 39.58. Don't want to see that, but could happen. All right, so I bought these 39.80 puts. I said at 790. I'm gonna wait and look at the 1 minute chart. I'll sell them at 39.74 though, where we bounced off previously. Let's put an 8.8 limit on those. Ooh, looks like we bounced back before hitting that resistance point. Let's see if we can get down there. Wow, I don't know why Fidelity is being such a shitty platform today. Might be because I have 40 screens open, but my system should be able to handle it at least. 701 on Tesla, about Tesla 900s for June are back in the positive. BNGO is up 6%. BA calls are up 11%. HD still down about 20%. Um, yeah, HD just hasn't, Home Depot just hasn't recovered as much. Let's see if we can get a push here in the last 44 minutes. I'm heavily weighted to the long side here. Dude, now you got in and out in my head. Double double, or triple 3x3 protein style. I really need to take some positions off the table. I really need to switch brokers here. I've heard really good things about iBroker or Webull. Let me see if there's any iBroker. Everybody's going to iBroker. Yeah, I'm going to iBroker. Forget this. This is crap. Having to deal with Fidelity and all this BS. Lost a lot of money today because my positions wouldn't update on my screen, so I didn't know what I had. Had to log out and log back in to see them. All right, another month to make back profits so that we could make money for taxes here. SPX down to 3976. Wonder if we got filled. I can't even see if I got filled. All right, let's sell these at 8.3. Take a little bit of a profit there. See if we could drop down a little bit more. Okay, sold out of those for, can't even tell. I know I bought them at 7.9. Sold at 8.3. Let's get rid of that. So now right now we're still playing the 39.80s for Friday. All right, now instead of buying puts here, I am going to look at this retracement line at 39. Let's see, where did I draw my levels at? 39.63, 39.68. 39.68 is our likely retracement point here. So if we don't bounce here off 39.74, then I'm going to be targeting to buy some more 39.80 calls, lowering my average a little bit. All right, I'm going to get iBroker today and then initiate a asset transfer. This is so ridiculous. We got a little bit further to go. I think 39.68 potentially.